Hi everyone, hope you're doing well. Today we're going to take a look at Google stock and AMD stock. Both stocks are crashing in pre-market after the reported earnings last night. Both of them I own, and both of them, in my opinion, were absolutely stupid moves from the markets. And today we'll take a look at why the stocks are dropping or why they should not be dropping. So I hope you enjoy the video. Hit the like button. Let's get started. Now, just a quick shout out. If you do want to go get 10 free fractional shares from Webull, I'll post a link in the description in the comment section. If you join through the link, you'll get 10 free shares worth up to $3,000, which isn't too bad for just signing up and creating an account as well. But let's get stuck onto today's video, and we're going to take a look at Google's earnings. We're going to take a look at AMD's earnings. Like I said, Google earnings currently down around about 7% in the stock's down about 7% in pre-market, and AMD's slightly more, down 8.5%. So yeah, we'll take a look at Google to start with. I'll go on to AMD in a second. So Google, I love Google. One of the best, if not the best companies in the world on the stock market, one of the best balance sheets in the world. It's a top 5 business to own, and anytime Google has a dip, I am a buyer of Google. And right now, 27 times earnings, 23 forward times earnings. By the time the stock opens up, it'll actually be around about 22, 21 times forward earnings, which is not too bad at all for a company that is probably the best company in the world. Looking at the numbers, nice EPS beat, as we can see here. Revenue of 11.8%. One of the main things that I can see is people throwing the toys out the pram because they missed by 170 million. That's on a revenue of 96 billion. If we are punishing stocks for missing by 170 million on a revenue guidance when they're making 96 billion, if the market wants to be stupid, it can go be stupid. It can go do that. The numbers were so impressive. Revenue growth, like I said, very good for a company at this sort of valuation. Operating margin up nicely as well, up to 32%. Other income as well, up nicely as well. Net income, great amounts of growth, as you can see here, up from 20 million to 26 million. So that's even better when you have a net income increasing faster than the revenue growth. And what's that? An EPS, big increase on the EPS? Yeah, I mean, net income's up nearly 30%, close to 30% on these numbers. That's impressive. Very, very good numbers, as you can see here from Google. You look at the Google search, strong numbers from Google search. YouTube ads strong. Google network was slightly weaker, but that's okay. Subscriptions up. The Google service total up. Google Cloud, insane growth from Google Cloud. Look at that. You're talking nearly a 30% revenue growth there on Google Cloud, which is great. The next big growth driver for them. Shout out to other bets as well, growing at really nice rates, as you can see here. And if you look at the income from Google Cloud, that's where a lot of the profit is starting to come from, because it is a big profitable part of the business for them. And if we have a quick look at Google Cloud, it went from 864 million up to 263 million. So nearly 30% growth in profitability on Google Cloud. That's going to really help the profit drivers for Google in the next few years. I think a few people are throwing the toys out of the pram at the moment, because I think they went on to say that they're going to spend a little bit more on improving the products in Google. I mean, I can't stand it when Wall Street punishes a stock because they want to invest more into the business. Google is one of the most profitable businesses in the world. If they want to go create another product with one of these AI products that they're having good success on, go do it. You've got the cash to do it. And especially if they're in a position where maybe they lose one of the products going forward, one of the big products that's going to make up for that in the next few years is an AI product. And if they want to keep investing into the AI space, go do it. You've got one of the best balance sheets in the world. And I'm fed up of seeing Wall Street sell the stock off because either it missed slightly by a couple of million, or it's spending a little bit more because it's got the money to go do it and it wants to go get another growth driver for the next 4 or 5 years. The market looks so short term on Google, and it's like, look at Google in the next 2 or 3 years. All we're going to see is a trend continue on this stock as it has done. And every time where there's a little blip in the earnings and you come back to it in a few years' time, you'll look at that little blip and you'll go, that was probably an opportunity that we should have been buying up, and it'll rally up from there. And this is the exact same with Google. I think we'll come back in a year's time and Google will be higher than where it is today, and you probably go, I wish I bought on that little 10% drop off earnings because it was ridiculous. And that's the case with Google. Next one, AMD. So last night was the theme of stupid drops in share prices. AMD's was probably the most stupid one of them all. I can't believe the stock is down today. I thought the stock would be up. In fact, I think I looked at my phone and I got a notification from Trading 212 saying AMD stock was up 10%. And I was like, fair enough, looks like they've hit the numbers, they've been rewarded for it, whatever. And then I came to look at it and the stock was like down 8-9%. And I was like, how have we had a 20% swing in the stock here? And then I thought, oh no, like have the numbers gone totally wrong for them? And then I had a look at the numbers and I went, okay, EPS in line, okay, good stuff. Revenue growth, 24% year over year, beat by 170 million. Yeah, so why have we gone down on these earnings? And then I also looked at the guidance and thought, is there something in the guidance? And then the guidance was 1.7 billion to 6.9 billion, which is higher than the growth, the guidance that was there previous. So I was like, so we've had a triple beat, but yet the stock's gone down 10% today. It didn't make sense. Did not make sense. And this company's currently like 23-4 times earnings. If you take the one-time charges out, it's probably towards like 20 times earnings now. And I said to you guys, I said the perfect situation for AMD is that they bring out fantastic earnings and the stock goes down and I get to buy the stock cheaper, even though all the fundamentals are moving in the right direction. And that's what's happening. So at first I was a little bit frustrated with this move, and then I went, you know what, if the market wants to be stupid and it gives me a stock at cheaper prices after fantastic earnings, I'll take it. And that's what's happening with AMD. So you can kind of see where my direction is going to be with AMD in the next kind of few weeks as I buy up the dip. I cannot pick an error with this at the moment. Revenue growth up 24% year over year. You know, a company that is 23 forward times earnings, growing 23% year over year, 24% year over year. This is up from the 18% in the last quarter. That's up from 14, I think it was 14% in the quarter before that. This company's growth is speeding up. And when a company normally accelerates, the share price should follow. And Wall Street is doing its classic thing of like, well, we don't like this, so and the stock's in the dump, so it's just a trash stock, so we're not going to buy it at the moment. And then eventually, all of a sudden, Wall Street goes, actually, we probably should buy AMD, and then they realise a bit too late. Wall Street's doing what it normally does. It's just slow to react to seeing all the fundamentals improving rapidly on this business and the sleep at the wheel. You know, we saw that with DraftKings. We saw that with the likes of Hims and Hers, for example. We saw that with, well, before the latest quarter of PayPal. All the time, Wall Street is just so slow to realise, actually, these are very good earnings. And within the next kind of 2-3 years, they'll eventually send AMD up and they'll start buying it. And then it was like, oh yeah, AMD is really good. But it was obvious right now that AMD, everything's going in the right direction for the business. Gross margin up from 47% up to 51%. Operating income up 155%. So impressive. Now, net income was down slightly, and earnings per share was down slightly because there's some one-time charges going on. So you kind of have to use non-GAAP earnings at the moment, and that's why I refer to operating income. And if you do look at the non-GAAP earnings, they were, as you can see here, there you go, non-GAAP. You can see here the net income was up 42%, and diluted earnings per share was up 42%, which is so impressive. So once those one-time charges are out, you're seeing the real profitability there as well on the bottom line. In absolutely crazy growth. I generally can't find why the stock is down at the moment. I've had to try and search for why AMD's been down, because these earnings should have seen the stock up 10%. And the only things that I can find is that people are still negative on the stock because it's in a downtrend. So people are going, yeah, it's still a trash stock. And then eventually when the share price starts, because that's what people do. That's what a lot of people, that's what 70% of the people do in the stock market, is they look at the share price and go, yeah, the stock's down, so it's a trash company. The share price is down after earnings, so it's a trash company. They don't know what they're doing half the time. And eventually when the stock starts following the financials, as we can see, you know, what do you need to have a successful company? You need to have profit growth and revenue growth going in the right direction. What have AMD just finally come out with? Well, if you look at the last results, revenue up 14%, which if you look at the latest quarter is even higher. And you see net operating income up for 374%, net income up 92%. That's what gets the share price up. The fundamentals improve, and at a good valuation that AMD is at, it will get rewarded eventually. It's just when the Wall Street decides to stop being stupid. So the thing maybe why it's down is that it's just still the negative, advanced money destroyer sentiment hanging over it. Trying to look at any other kind of negatives with it. Data centers, one that I think I've seen pointed out. Some people said that the data center revenue missed by like 100 million or something on 3.9 billion of revenue. I was like, guys, come on. Are we at a point where we're judging a company by missing by 100 million after the data center just grew 69% year over year? This is what I'm going to get. If we want to be stupid, let's be stupid. And you give me those shares at cheaper prices, because right now, Mr. Market, you're being stupid and you're giving me shares at cheaper prices that shouldn't be here. We shouldn't be punishing a company because the data center revenue was down. Not down, sorry. It was up 69% because they missed by 100 million. Come on, guys. Let's not forget that overall the revenue hit the target and was ahead by 170 million. Because also, is that it's not important to look at the other sectors, because client segment revenue also outperformed what was the guidance was. Do we not reflect that at all? When we look at the embedded segment, that was ahead of expectations, and once again, this is improving. 33% down in the last year, but in the last quarter only down 13%. So that's actually starting to improve a little bit at the moment. So yeah, we can look at the data center and go, well, it missed slightly. Oh, panic. It shouldn't panic. But at the same time, is that not leveled out because client segment and also the embedded segment was also better than what's expected, and that made up for the dip? Is that not what we do as investors? Is that we go, that was slightly behind, but as we look at a company as a whole, it levels out. And let's not forget, it's still up 69% on the most profitable part of the business as well. What else do we want? The main part of the business is growing at 69%, and I've seen these crazy headlines put out about it. Like, I don't know if I can even show you it right now, but we're seeing like crazy headlines put out saying that the AI is slowing down. I tell you what, if slowing down is 69% year over year growth, I'll take a slowing down revenue of 69% year over year growth if that's what we're going to be doing. I just didn't get the drop at all. I mean, Google, I thought that was a bit of a stupid drop. AMD's was just, because the stock is down 10% and the valuation is so cheap. Google is what, 23 forward times earnings. AMD's 23 forward times earnings. Google is growing at 10%. Okay, yeah, it was a strange move from Google's shares. AMD is the more stupid one because it was 23 forward times earnings and it grew at, what do we say, 24% year over year? The profit has ramped up massively. This is just ridiculous. I am, at first I was annoyed by the drop in the share price because I thought this stock should have gone up on those earnings. But then I was like, you know what? This is what I asked for. I asked for the market to carry on being stupid and give me shares at cheaper prices, and I can buy the stock at cheaper prices now on fantastic earnings. And if they do what the guidance suggested, which, if I can just quickly go on it again, which is now revenue to go up to, it doesn't even say. I think it's something like 28%. So if we're still expecting another acceleration of revenue in the next quarter from 24% up to 28% now, just give me the shares. Just give me the shares. If this carries on with AMD, I will make AMD my third largest position in the portfolio, because it's so disconnected. The share price is getting so disconnected from the financials, and I love that. I love it when Wall Street just has so much negativity over the stock that they just go blind on the financials because the share price is down for so long, and then eventually go, oh crap, look at AMD, the financials are actually really good for a company at 23 forward times earnings, and then they'll all buy into it. I've seen it before. I've seen it before with Hims and Hers, where the fundamentals were all improving and Wall Street continued to send it down to $3, and then all of a sudden they went, actually, this is a bloody good company here, we should probably be buying this. I've seen it with DraftKings when it was down at $10. I saw it with PayPal when it was down at $60. I've seen it with Mercado Libre when it was at $900. I've seen it with Google when it was down at $100. I saw it with Meta when it was down at $80. I've seen it all before, guys, and honestly, like, the funny thing with the stock market game sometimes is you go, how did that happen again? How did the market send like Meta down to $80? How was it that stupid? And you go, it can't be that stupid again. And then you see something like this and you go, actually it can. It can keep doing stupid things, and that's what's happening. So, hey, you know what? This is how the market makes me a lot of money, and I'll take it, because that's how we work in this game, and that's how we have had such good years in the stock market. So I will take this opportunity big time. Thanks for watching, guys. See you in a bit.